company where she's going to teach you how to be a successful trader in the stock market. Her method is teaching of owning and creating a very unique way of, similar to mine, like day trading. She's very well known. She's been on almost every financial station that I can know: Fox Business, RT America, Cheddar TV, CBS News, Newsmax. I mean, the list goes on and on and on. Her main thing is talking about making a million with Melissa. And she's an author. She's a great presenter, and she's going to cover and talk a little bit about what's moving in today's markets and how to prepare for today's markets. She's also a fellow New Yorker like me that lives in this not too far from me, and so she knows a lot of how Wall Street really works. So, Melissa, thanks for being here. We really appreciate it, and the traders are here also very excited to hear you, what you have to say, and how to prepare for today's volatile markets. So, stage is all yours.
Thank you. Okay, let me try to share my screen. Let me know if you can see.
Yeah, we see it okay.
Perfect. Wonderful. Thanks so much for having me today. If anyone has any questions, like Fausto said, you can write it in the chat. I will go along. As Fausto said, my name is Melissa Armo. I live in Manhattan, and I trade the stock market. I actually have been trading now for 17 years, which is hard to believe. I think once you get bitten by the market bug, you're pretty much hooked. I think for a lot of people, though, they're back and forth for a long time, some people longer than I'm alive, trying to make it, trying to make a success of it, trying to make money in the market, winning, losing, winning, losing. And over the long hand, or the long course of things, losing. It's really not impossible, though, to make it as a trader. I think a lot of times people blame their own personal discipline. If you take a trade, and even if your discipline is messed up by your sizing, if you're in the right direction, chances are you're going to make money. A lot of people lose trading because they're in the wrong direction. When a stock is falling, they're long. When a stock is rallying, they're short. So I hate to simplify it, but the reality is, if you can determine the direction a stock of the market will go ahead of time to take the trade, to place the trade, to get in before the move happens, you will increase your profitability. Again, you should have your discipline down with your sizing, but really, I've had people trade with me and they're not great with their sizing, but they're still making money, because like today, for example, we shorted crowd. You can look it up and see what it was. That was today's play of the day. And it worked. It fell. We shorted it. And I'm mostly short. So actually, the last 2 weeks have been huge for us at the Stock Swoosh. Every single day has been better than the next. And some of it is tariffs, which we can talk about throughout today's lecture. Some of it is the Fed is probably not going to lower interest rates this year, which the market is realizing. And again, of course, what's happening overseas with the many wars that are going on, and the scuttlebutt that happened on Friday, if anyone watched it, between Trump and Zelensky. So the market is scared and worried about lots of things right now. And so it's been very volatile. But if you know how to trade and you know how to make money, it's been a great time to trade. So I'm going to talk about trading today on the side of institutional money and gaps. I trade gaps. That's what I do. Again, if you have any questions, you can plop it in the room as we go along. As Fausto said, I appear on TV. I talk about the economy. I talk about the stock market. I give my opinions. When I trade, though, I'm looking at the price action. So I'm looking at the charts. Like you can say this thing, that thing, but at the end of the day, it's really about what the price is doing, because sometimes it doesn't line up. You can have a stock that has fabulous earnings and then it could sell off like a hotcake. So it doesn't always add up to what the fundamentals say in a stock. If you have questions after the fact, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. I am a real person. I do live in New York. If I don't answer, you can leave a message. I will call you back within 24 to 48 hours. You can follow me on Twitter, which is now X, at the Stock Swoosh, Facebook, YouTube, or Skype. So again, it's 2025. It's already March. Before you know it, it's going to be spring here in New York City. I can't wait for the cherry blossoms. They come and go very quickly here. I live along Central Park, but the year is going by fast. It seems like the election was like forever ago, and yet it was only in November. And things are just changing so rapidly and often. And you have to be willing to change what you're doing as well. So if you're at a point in your trading, here we are, it's March 5th, and you're not doing well so far this year, you need to switch what you're doing. You need to change it up. You got to set goals for yourself. You need a plan of action to get somewhere with the year. You still have 10 more months almost left in the year in order to be successful. But the earlier you get on the right path, the earlier you start trading, the earlier you learn a strategy, a winning strategy that you can duplicate to capitalize on some of these moves we've had in the market, then the higher chance of success you're going to have going deeper into the year. And I wouldn't put it off. Again, the beginning of the year, change in seasons. Like I said, we're going from winter to spring here in New York and the Northeast is a good time to learn, to think about doing something different, to, again, you've heard of spring cleaning, kind of spring clean your trading, clean out the cobwebs of some things that you're doing maybe that haven't been working. A lot of times people come to me, they want to train, but they don't know how to make the transition. First of all, if you're full-time with a job, you can't quit until you're actually replicating what I do and making money training. So I tell people kind of transitioned into it part-time. Be in the trading room 2 days a week, 1 day a week, 3 days a week, whenever you can make it work. I trade in the morning between 9:30 and 10 a.m. Eastern time. Like I said, we short a crowd today. It was a very quick trade. We were in and out. I said the target was 350. It actually continued past that, but we got out before that because I like to do fast, quick trades. Okay. So you can figure it out. You can find a way to make it work. I worked 2 jobs when I was teaching myself how to trade. You got to figure it out. There's never going to be any perfect time. We're going to have all the time in the world and all the money in the world to trade and all this free time. That's just not realistic. Okay. You have to find a way to transition if this is something you really want to do. Now, I put the stats for last year in here for the room just to show you an entire year's worth of stats for the live trading room. These were all the trades we did last year. Again, mostly shorts. I'm mostly short. And my average risk on my day trades, which are margin trades, which you need a margin account to do the day trades, for last year, my average risk was around $3,500 a trade. Our results for last year was $901,138. Very good year. I have in here the stats through for 2025 up till about the week of Valentine's Day. I'll show you in a minute. And some people have already increased their risk because some people are doing very well. Some people even that just did the class in January and February. Like I said, I prefer to short. We've had tremendous opportunity so far this year to do that. So last year, the total win ratio for the whole year was 69%. That means for every 10 trades you take with me, you have to figure 3 are going to lose, 7 are going to work on average. Okay. That's what you should think of it. Again, when I'm day trading, I use a stop. I put in a stop. I also put in here the stats for the options newsletter. Now, my trading room is not an options room. So my trading room is a newsletter. You get the newsletter live to your email in live time. You take the trade when you get it. I'm risking more in my options trades, okay, which is why my total profits are higher. I'm risking an average of 8,000 in my options trades. And the reason is I want to do sometimes things that are more expensive. Like I didn't do a put in crowd. I could have. I didn't because I have other things on right now. But that was a little pricey. If you did it today, it was a little spready, but it worked. It would have worked. It would have worked even with the spread. So again, you could take one contract. You can risk less. Again, these trades I'm holding a little bit longer. So we've had some huge trades even this year doing options, which again, I'll show you the stats for that in a minute. But again, I'm risking more for this, but again, still at similar win ratio. And again, over 3.8 million last year, was at a 70% win ratio for the newsletter for last year. So again, for every 10 trades you take with me, 3 are going to lose, you figure, and 7 are going to win if you want to follow and replicate my results. For all of last year, over 4.7 million, great year. It was a bullish year for the market. I mean, this year so far, we're still in an uptrend for the market, we'll see. But you can short in a bullish market. You can short in a bearish market. You can short all around the town. It doesn't matter. We're looking for specific stocks to trade. So this is the results. Again, I didn't update this. I've been so busy at a February class, but this is only through the 13th of February. Our results for the year through 2/13 in the room was 158,884. Stats again, 69% win ratio. And then I put the options. Again, this isn't updated either for the last 3 weeks. 221.6, again, 72% for options. One of the biggest trades we had in the last 2 weeks for options was Tesla. And interestingly enough, that was a huge trade for us. We did calls in it before the election, and then it ran up after the election, November, December. Tesla was a huge winner for us going long, and now we've been shorting it. And it's been a huge trade to short it. So Again, you can short stocks, you can go long stocks. Some of the trades I do are longs. I just prefer to short, and we'll talk about that a little bit more as we go along. So this was year to date only through the last couple, not through through the middle of February. And if I have time, I will try to update the stats on my YouTube, but every day is busy. And again, this is part of being a trader and a teacher and everything else I do, and being here with you today. So again, as we go along, if you have questions, ask me. But what I do is I trade gaps. I teach a class once a month. The class for March is March 15th and 16th, which is next weekend, not this weekend, next weekend. And I teach my method. So again, if you're somebody that's like, I have no idea what I'm doing every day, I'm all over the place with my strategies, or if you don't have a strategy at all, it's very difficult for people to be successful if they don't know what to do every day. They get up, they watch TV, they look at the trades, they say, what's happening? And they kind of just fly by the seat of their pants. Flying by the seat of your pants is not going to get you anywhere near the stats or the profits that I just showed you. And it's not going to get you near profitability at all, because most day traders, most retail traders, most active traders actually lose. And the reason is because people are back and forth and don't have a winning strategy, or they don't have any strategy at all. So I make it easy for people by teaching people my method in the 2-day class. And then all they have to do is get up in the morning and go through, find stocks that are gapping and rate them. And the process is, if the stock rates 20 points or more, I take it in the direction of the gap. Again, talking about how one of the reasons we sold off the last few days, you could say, is tariffs. Well, again, whether I think tariffs are good or bad or whatever, it doesn't really matter. If I see a stock and I rate it and it rates good to short, I'm going to short it. Again, we're doing momentum trades, we're doing active trades, we're doing fast trades, we're doing quick trades. This doesn't mean I'm like bearish on the market for the year. This doesn't mean, oh my God, tariffs are going to kill the US economy, we're going to go into recession, even though we could. I don't know. It means that I'm positioning myself to make money. I have one job only, to make money. And again, talking about what's happening with the Ukraine war and Russia and everything and all the scuttlebutt, like I said, with Trump, the fact is, you got to just move yourself beyond that. Like, move beyond it. Say, okay, I can make money doing something here and capitalizing on this craziness. And that's literally how you have to be, quite frankly. Somebody has a question here. Do you get gap trades pre-market or after the market is open? The day trades I'm only doing during the live day between 9:30 and 4. You have to be in the room to do the day trades, like where I call the Trade Today in crowd. If we talk about the options, I will send options newsletters out early in the morning before the open, but I still don't take them, and you can't take options trades until after the open anyways. So I might send out a gap or a trade at 6 o'clock in the morning. We did Target yesterday. That worked. So I might send out an option in the pre-market, but you can't do that trade till after the open anyways. So you can get organized, you can set up, you can say, oh, Melissa likes this thing, this thing, this thing today, but you can't do the trades until after 9:30. I don't know if that answers your questions, but you know what I'm looking at, and you know what to get ready, and you know what to do, because you'll see it ahead of time. And sometimes I do options during the day, but most of the trades are sent out in the pre-market. Anyways, everything is about making money. That's my focus. That's what we're here. That's what I do. Again, making money. And again, it's on momentum. So stocks go up, stocks go down. You have to know how to play both sides. A lot of retail traders prefer to go long. I've noticed that a long time ago when I started the business and started teaching people. I knew I had a niche with shorting because I couldn't hardly find anything out there on shorts when I was trying to teach myself how to short properly. And a lot of stuff was crap, or it wasn't good, or it didn't work. And then I realized, oh my God, there's hardly anybody shorts and people don't know what they're doing. So I created my own system to short. But the fact is that most retail traders prefer to go long. First of all, some people's accounts are not set up to short. You can buy a put. Okay, you can't short your retirement account, but you can buy puts, or you should be able to in your retirement account. If you're not sure, you can call and ask. And again, if you're not someone that has the amount of money to set up a margin account at a broker to do shorts, well, then you can go prop. You can go prop, set up a prop account, look into it. People tend to want to go long because they say, oh, I'm going to buy low and sell high. And they can wrap their head around this. Listen, shorting is very simple. If a stock is at $10 and drops to $9, you're betting it's going to fall. You can make money on the drop. That's it. It's as simple as that. And actually, you can make money shorting faster than you can make money going long. So there's lots of reasons retail traders prefer to go long, but that gives me a niche because I short. And I'm telling you right now, and if you don't believe me, look at the last 2 months or the last 2 weeks. If you don't know how to short, you're going to be in a situation this year. You're going to be in a pickle. You're going to keep wanting to buy every dip, and you're going to lose like in the last 2 weeks, and you're going to, and there's no reason for it. You have to learn how to play both sides. Again, there will be a time to go long the market at some point. There will be a time. It's not right now, but the fact is there will be a time to go long, and I do go long. Like I told you, we went long Tesla and we went along a bunch of other stuff, the market after the election. But if you don't know how to short, you're just like, it's crazy. Okay. You need to know how to do both sides of it. And you need to have your account set up that you can do both sides of it. But anyways, I'm trading momentum. So don't confuse momentum with the trend. Okay. I'm trading momentum. I want a big move. Again, you can pull up the crowd today and take a look at it. Or here's one we did. This was a month ago now, actually, PayPal. Here was a gap. So what is a gap? Let's just talk about that first really quick. Stock closed here, gap down, boom. This is PayPal, closed up here, snug as a bug, right around 89, boom. Gap down here in the morning, around 82, open, rallied, fell. So we did a short, we shorted it. This is a big move, this is momentum, this is a sell-off, okay? So we took advantage of this, we shorted it and did a put, okay? And I don't know where this is right now. This was last Friday, but look where it went. It's a beautiful, beautiful trade. And this was on earnings, okay? Again, I like to do the fast trades, but actually you could have just shorted this as a swing trade, or you could have done an option out for longer than we did. So we did the $80 puts that expired on the 7th. It was a fast one. We did it the week of the gap. Again, I set this trade out before the market, before the open. It was a nice trade. It was cheap. $1.15, you could have done one. You could have spent $115. Again, my risk is higher. Either way, it doesn't really matter what your risk is. The idea is taking the trade, getting the direction right, which was a sell-off, and the return on investment was 139%. This is what I call an advanced trader risk. If you did a smaller risk, say you did 1150, took 10 contracts, and this is 1,050. I mean, you can make money risking an average of $1,000, 500 even. You could have done 5 contracts. You could have done half this. That's $1,600. Flipping your money around. Doom. This is taking it the same day, getting the drop, getting out. Okay. And again, if you don't have a margin account, okay, and you want to do puts, you buy the put, you set up a cash account, you just pay whatever it was. And again, in this case, this was really cheap. Okay. And there's lots that we do like this. So that was a good one. Any questions here as I'm going along? I'm watching the time as I'm talking here. Getting back to what I was saying, people take trades in the wrong direction. I think a lot of people that are retail traders are having a tough start to the year. The market was very bullish last year. Actually, it was very bullish in the last 2 years. There's a lot of reasons for that. But the fact is that I think a lot of retail traders, if they were honest with themselves, are having a tough start to 2025. If you're in that camp, you're down for the year, I mean, you got to take a look at what you're doing. I say stop, take a break. Whether you do my class or somebody else's or just take a break, like don't dig yourself into a hole. I've been teaching people now for a long time, like 14 years. People tend to want to just double down. People dig themselves into holes a lot. And then the deeper they get, the harder it is for them to spend the money on a class like mine or even keep trading at all. And one of the most negative things for people once they're losing is that it not only does it wreak havoc on their finances, it also it's a mind game. It puts them into a negative space where then they feel like everything's rigged and the market's rigged and it's all rigged against them and they get into this negative mindset. You gotta be positive when you trade. Again, I showed you the stats. Not every trade that I take works, some lose. Now, right now, literally every single thing that we're doing is working. The opportunity's been there and I've capitalized on it and I've been doing this for a long time. But the fact is that there are times that I take trades that lose. I don't get in my head about it anymore. You take the trade, you take the risk, you do it, boom, you're out. And that's all that you can do. You can't dig yourself this terrible, terrible hole, because then if you really want to do this and you really want to be successful, you'll never be able to move forward, and you have to be able to do that. No one was born and wakes up and takes one class and then all of a sudden is successful after that, or just starts trading the very first trade and then makes all this money after the fact. That's not realistic. And also, you can start out small. You can do one contract. You can do 100 shares. You don't have to start out with an advanced trader risk. I'm trying to show you different risks, okay? But in order to become successful in the market, you have to become a specialist. You got to get good at one thing. So I'm good at shorting, I'm good at gaps, I'm good at trading momentum, I'm good at the fast trades. A specialist in one specific strategy, and like I said, for me, it's gaps. But I'm really reading institutional money, or what I call power money in the market. This brings momentum and opportunity. But like I said, like I talked about, opportunity. Every trader in every level must learn the skill set, and it can be acquired through education, and that's the only way. Okay, so again, you could say, well, I did this and I thought this would work, and I traded this strategy and this didn't work, and now I don't know if anything works. You know what? There's a lot of stuff out there that doesn't work. It doesn't mean that nothing works. Like, seriously. Just like if you go to, I'm going actually to a new hairdresser on Thursday. I've been letting my hair grow out. Like, just my hair, you could do anything with it right now. And I'm like going to a new person Thursday. I'm like, okay, I got to get a haircut. I need to go to someone. I have to trust someone. There's a million people in New York that do hair, and they charge anywhere from $150 a haircut to $650 for a haircut, which I'm sure some of you might find ridiculous. Just because they're expensive doesn't mean they're good, but sometimes the more expensive ones are good. But there's a lot of bad ones, and I've gone to a lot of bad people too. It doesn't mean that they're all bad, okay? So again, at some point you have to take a chance and say, I need to get something going here. I need to learn something. I have to do something. And that's kind of how I'm at with my hair. Like since COVID, my hairdresser left New York and moved to Westchester. I've been floundering with bad haircuts, trying people, letting it grow ever since. And you just have to take a chance. I'm just using an analogy. I could have picked, many different analogies, but it's the whole point that at some point you have to say, I don't know how to do this. I want to do this. I want to be successful. I got to go to somebody to learn, because what I'm doing isn't working. And that's what I'm telling people, especially at this point in the year. Like, I'm a fan of Seinfeld. I watch the reruns that are on. Jerry was here when they did the SNL reunion. I don't know if anyone saw that. He was in the audience. It was a couple of weeks ago. They had the 50th SNL reunion. He made comedy his thing. When he started out, when the program launched, when the pilot was out, it wasn't successful initially. He was very good at stand-up. He kept getting better with his acting, and he made a whole career of it. I mean, look at how successful he is now. It's about getting good at one thing. That's it. That's all you need to do. You're not going to become an expert in futures and Bitcoin and crypto and everything else. You just have to find one strategy and one thing, and you get good at it. And that's it. Okay. So here was the Tesla. Again, I didn't even put in the last 2 days or 3 days here, but this is through Friday. I was talking about the fact that this was one of the big ones that we did. One of the big trades that we did here was that I called the 300 puts that went literally lickety split on this particular day here, which the stock actually gapped. So this was back last week. Stock closed here, gapped down and fell. Again, I was talking about momentum. This was a beautiful gap, and here this shows momentum. Okay. So you only need one thing, is my point about the hairdresser story or Jerry Seinfeld. Get good at one thing. That's it. And be willing to open up and change and take a chance and keep a positive outlook and a positive mindset, because everybody that's out there that's trading is taking money from somebody else. So if you're trading and you lose, guess what? I might have taken your money. The thing is that you're not really creating anything. It's like I go out in the street corner of New York City, people are selling things, or selling bagels, or selling, fake designer purses on the street. Some places you go downtown, we're not buying and selling or manufacturing an actual product when we profit on trades. I'm saying I see the Tesla and I'm predicting it's going to fall. I happen to be right. It does. And I make money. The person that predicted it would rally lost, and I took their money. And that's really what it is. It's a zero-sum game. You've ever heard that from the movie Wall Street. Actually, this was one that we did way before, 211, 345. Let's go back to that, 211. Oh, this was all the way over here. We did this one. Stock closed here, gap down, open, dropped. Boom, take it over. See, it went to 325, and we did the 345s. And it worked. This was a little pricier. Cost was $7, sold at 21. Profit was 18,200, a 200% return on investment. That was a nice trade. Again, if you took 2 contracts, profit was 2,800, return investment 200%. So again, when you're trading, you decide your risk. It should be the same or close to the same, whether it's $500 a trade, $1,000 a trade, whatever you want to risk. That was another really nice short in Tesla. Any questions here as I'm talking? How are we doing? Someone says eek. I don't know what that was about. Anyways, you want to get ready for the next earnings season. Okay. Earnings season begins in April. Okay. For the next earnings season. But right now, it's not earnings season. It's the end of earnings season. We did crowd today that was earnings, but it's really the tail end of earnings season. We have retail this week. We did Target yesterday. But the fact is, there's been tons of opportunity. Even still, why? Because the market moves. Things were happening with the market. Okay. Now, again, how can you earn a living trading? Number 1, you need a winning strategy. Learn first. Number 2, you need a supportive mentor. Do and follow. Very important, because if you don't have a mentor, who do you ask questions to? And number 3, become an expert in one thing. Implement the strategy, get good, and then add size to win big. So someone says, well, how can I make more? Guess what? You can add on to your size. It's not about trading all day long. Again, I could have held that crowd this morning longer, but I got in, got out. I did my thing. I did what I did. So again, how do you make money in the market? You have to determine who is in control. Who is in control? The bulls or the bears? Who's in control? If you can determine that, it's going to be a heck of a lot easier for you to make money. And again, you want to do it before the move happens. Otherwise, you're chasing it. You have to get the direction right to win. If you get the direction wrong, you're going to lose. Again, it's just that simple. This is another one we did, Walmart. Stock closed here, gap down, open, dropped. We shorted it. We did a day trade here, or did a put. You could have got in, got out here. You could have got in here. You could have got out here. You could have held it all the way down. That was a nice call too. And again, this is momentum. This is momentum to the downside. So you would have wanted to short or do a put. So again, number 1, how do you become successful? And you need a winning strategy, and mine is golden gap. So what is a gap? A stock gaps on the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So guess what? Almost everything gaps every day. The market gaps almost every single day. It's very rare that the market wouldn't. Does that mean that every gap is playable or what I call predictable? No. No, more things are not playable or not predictable than are actually good. And that is how I devised a method to narrow it down to find the good ones. Again, I'm looking for a high chance that something's going to work, a high percentage of win ratio. I want more things on my side than against me. There's never 100%. I'm like looking at it, I'm analyzing, I'm looking at 26 things. I'm saying, I'm trying to talk myself into doing this, risking my own money in it. Hard-earned money. I want it to work. I'm trying to get as many things in my favor. It's taking calculated risk, not, like I said, not trading on the fly. Here's another gap we did here. Stock closed here, gap down. This was Nvidia. This was back at the end of January. Stock closed up here around 141 and change, gap down here around 125. Open, rallied, dropped. This was a huge move for this stock. It was a $10 move down, actually. So again, you could have shorted it, could have done a put. Okay. Anyways, what is a golden gap? The golden gap is a gap that rates 20 points or more per the golden gap 26-point rating system. You take the trade in the direction of the gap. You do the trade as a day trader, an option, or both, which is what I do. It's about the focus though. So my focus is number 1, gaps, and number 2, shorting. Again, we talked about this PayPal. What a beautiful one here. Boom. And you could have traded this multiple times, actually. You could have been in that in the last week. But my process is I do the same thing every single solitary day, even though I may be doing a different stock every day. I get up in the morning, I rate the gap using the 26-point checklist. So if you come and want to take my class, this is it. This is what you're going to learn from me. This is the meat and potatoes of what I do. And you can do it yourself. Even though I'm calling the live trades of the room like crowd, you should rate the gaps yourself. That's the whole point of doing it. You get up and rate it. You log into the room. You say, oh, Melissa liked crowd. I like that too today. I also liked A&F. We did not do A&F. I didn't do 2 things. Some people did A&F, but actually A&F worked too. The only reason I didn't do A&F over the crowd was it opened late, which is kind of weird, but in that industry, sometimes they open late. So you could have 1 pick, you could have 2 picks. You only really need 1 good trade a day, okay? But the rating system helps me determine who's in control. Who is in control? And again, don't get control mixed up with the trend either. Okay. It's a lot of people don't understand that either. Okay. So gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps. There's more of those than not. And some gaps are very powerful displays of institutional money, like crowd today. The most important gaps of the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you will know when the power money will flow to pay you. Again, this takes the guesswork out of it for you. You are not guessing. You go through the system, you go through the rating system, you take the class, you learn it, you rate it. That's it. Bing, bam, boom. If it rates 20 points or more, you do it in the direction of the gap. If it doesn't, you don't do it. That's it. Simple. You don't do it. Okay. It's not, I think a maybe, do. No, you can't be like that. All right. And ideally, I'm looking for things actually that don't even need the market. Now, we've had some nice trades that the market has actually helped to go further. But ideally, I wouldn't need the market at all. Okay. So I'm really looking for reading the footprints of institutional money that come into the stock and either dump it, sell it, or go long. Okay. Again, today we're talking about mostly shorts because I'm mostly short. But the fact is that, like I said, we will go long. We've done some longs. If you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and then get out after the move happens for profit, like I just showed you with some of these. But you have to understand how to trade with the side of the power, and you need to know how to find it. Knowing how to read what institutional money looks like is essential to becoming a successful trader, and you can win big trading on the side of power. Like whether, and that's where, again, I was saying people get in their heads about how much risk they're taking or how many contracts or whatever. You can, if you're in the right thing, like Tesla, for example, if you did one contract, you made money in that trade and you made a lot of money for the percent that you risked. There's nothing you could do if you don't have a big account. If you have a $2,000 in an options account and that's all you got, you can still put it to good use. You can still take that 2,000 and build it to 3, then build the 3 to 5, and build the 5 to 8, and build the 8 to 12, and so on and so forth. You can build up your account by taking quality trades. It will happen faster than you think, and it will be less of a struggle. Everyone wants to wait till they have all this money, or they get frustrated because they don't have all this money, or they do crazy things because they're looking for big moves because they don't have a lot of money. You almost need to be more careful and more picky. I mean, I'm picky no matter what. Okay, I've always been picky, but you absolutely should be picky, and you should almost be more picky if you have a small account about what you're doing. And I find it's the opposite talking to people. When I've talked to people, that have come and they take the class, whatever, people seem to be more people do crazy things, I should say, or seem to take more risk who have smaller size accounts because they're looking for this one big trade that's going to make them all this money or something. Do you see how that doesn't make any sense? That just doesn't make any sense. You know what I mean? Any questions here? Okay. Let's talk about institutional money, AMAT. Okay. So here we are. This was back, where are we? February. Gosh, February seems so long ago now. Stock closed here, gap down. This was AMAT. Stock closed up here around 183, boom. Gap down here in the morning around 173 and change, open, dropped, boom. So again, institutional money was dumping this. And again, if you don't believe me, look where it went in 2 weeks. So again, look, this is actually a huge move for this stock on one day, okay, to have it almost $10. And then from here to here, look at that. That's big, okay? And all of that in there was lots of opportunity to make money, whether you did puts or day trades or whatever you want to do. I like doing both, okay? But again, it dropped. And that's how it is. I don't do anything gap and go or whatever you're talking about it. Again, I have a very, very specific way that I look at things which I designed myself. Nobody else looks at 26 things like I do. That's a lot of things. Sometimes people say, oh my God, how do you have time to look at that many things? I'm not rating 1,000 things every morning. I'm really not. I'm scanning, I scan very quickly, and then I make a small watch list. Now, during earnings season, I may have more things to look at. It may take me more time to get ready, but I don't rush it. And you have plenty of time to do it. 1 hour should give you the time to go through and actually do it and go through everything. Because I'm not rating, 20 things every morning, unless it's earnings season. But it's less than time consuming than you think. Again, it is about the quality, okay? But you need conviction to make money, and you get that from understanding why. So someone said to me, well, what about the market? The market's trying to rally. Maybe it's green right now. I don't, why aren't you on the market? What are you talking about? Tariffs, everything's going to be fine. If I don't have conviction, I'm not going to go long the market. If I don't think the institutional money is going to come in and buy this market, then I'm not going to go long. I could care less if it's on support. I could give a crap, okay? So again, trading and understanding why really helps you. It helps you take risk. It helps you get conviction. It helps you become more confident in yourself to plop on the risk. There's people that have big accounts and they're so scared to trade them. They're so scared. Especially people that have retirement accounts are like, I can trade this, I can do options, but I'm so scared what to do because I don't want to lose it because it's my retirement money and I don't want to lose. And people are so scared. People are trading fear because they do not understand why. Why do you know that's going to fall? Why do you know this isn't going to rally, Melissa? Because of the rating system, okay? And so understanding why helps you do it, take it, not do it, hold it, like we did the Teslas, or even say that it could go to some crazy, crazy number, like where we call the Tesla trades, just crazy numbers that they would go to like 600% return on investment in some of those options. So again, you could say, well, I don't really care why. I just want to take your trades and that's all I care about. Trust me when I say you're a human being, and human beings in general are curious creatures, and you do want to know why. You want to know why it worked. You want to know why it didn't work sometimes. And that's just the way that human beings are. So once you grasp that concept about human beings and yourself and the understanding, again, you're going to do better. You're going to do better. So I use a 26-point checklist. It's what tells me where to go, how to take the trade, what direction. And when you think about it intellectually, you're like, oh my God, it totally makes sense. It totally makes sense, like to trade momentum, to go with the institutional money, all of it. You know what I mean? And again, this is you. You're thinking, you're processing the information. You're saying, I like this. I love crowd. This is going to fall off a planet today. I love it, love it, love it. 350 for sure. Could even go more, And then when the trade hits, the market opens and it sets up and then you're in it, there's no fear. You know what I'm saying? It either works or it doesn't. But you act, and you act swiftly and with confidence, and then you can make thousands of dollars in several minutes. And that's how you do it. So again, why gaps? Gaps are the most powerful show of price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I'm looking for and trading momentum. Then whether you have a small size or large size, you will get a good risk to reward. Now, the Fed meets next week. It's going to be very, very interesting because what he says, everyone's going to scrutinize it like they always do. They may continue to act like they're going to lower rates this year. I don't think they do. We'll see what happens. Maybe the market rallies and what he says. It's neither here nor there. I'm still going to be reading the market. I'm still going to be reading the gaps. I'm still going to be looking at everything that's happening because, again, what he says does not always add up to what they end up doing. They said they were going to lower rates the entire year last year of 2024, and they didn't do it to the very, very end of the year. So you can't rely on what these people say to make decisions. Unfortunately, you cannot. And things change. Things change all the time, especially in a new administration. So again, institutional money is in charge of the market and stocks at all times. Even if you think it's not, it actually is. A big flow of money going a certain direction is what moves the market, stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be in the side of power in order for you to make money trading. Institutional money is in charge of the market at stocks at all times. Even if you think it's not, it is. Okay. So number one, you need a winning strategy. Number two, you need a supportive mentor, do and follow. So yes, people take my class, but then I make it easier for them. Everybody wants to know how long did it take? How quick can I make my money back? You should not be focused on that. You should be focused on learning this and doing it for the rest of your life. But I help people and support them by teaching in the room and then calling the trades live like crowd today so that you can profit quickly after the class. Trading is really about consistency. So I've been doing nothing else since I figured this out for a very long time. And I never will do anything else because this works and I'm doing very well. And the longer time goes on, I just do better because my instinct is there. I have an extra layer where I can see things and read things and, you know, just intuition and experience. And there's really no way to bottle it up and sell that to people. But I teach my method. That's something that you can replicate in the class. But there's definitely an edge if people get trading with me when I'm seeing something or trying to narrow it down between two things or one thing or seeing something's going to go or that the market's going to go in a certain direction. Any other questions here? We're going to go over a week of trades. These were day trades. Again, you needed a day trading account to do these trades. You needed a margin account unless you wanted to do them as options, but these were day trades. This is back at the beginning of February. This is 1 week of trades. We did NVIDIA, we shorted it, we got in, got out. Again, this is a trade I called in the room 2-3. Here. Stock close here, gap down, open, dropped. We got in, got out of this here in the little tail. We made money. That was the third. Then we did the PayPal on the fourth. Again, this was a really nice trade. I could have held this down. I got out at 80.35. It actually, here's why I got out. I did the fast trade and went all the way down here to 76 something. So again, you could have held it, but I did the put. Again, nice trade, profitable day. That was the fourth. Then we did AMD and I lost in the AMD. This was the fifth. Stock closed here, gap down. We shorted it. I got stopped. That was a loss on the fifth. And then I went back in and did a trade. It went long. This was Uber, which I, again, don't normally go long. Or no, this was a short. I'm sorry. This flipped it after that. It was a long. Stock closed here, gap down, open, dropped. We shorted this here. That was the same day I took the loss on the other one. But then you could have gone long here. I actually didn't do that. I saw that after the fact. Again, one of these gaps was earnings. One of them was news. I forget which was which. That was the fifth. And then we did F, which was a little rinky dinker, but it worked. This is a stock that's very cheap. You can load up in size. It definitely has volume. Stock closed here, gap down, open, dropped. Again, I got in and out of this pretty quick. It kept going though. That's all. It came all the way down, broke 920. That was a good trade. And then we did QCOM on the 6th. Day was this here. This I got in and out fast and killed it with a small gain. And then I did Amazon on the 7th, which was here. And this was another really good one that continued. That was a nice one there for the month of February. And that was 1 week. So again, it's just an example. 1 week of trades went one loser, 23,343. We didn't have any losers last week, and we didn't have any losers this week. You know, I obviously trying to keep losses down, but I still don't trade all day. I still don't overtrade. If I do the first trade, I'm in out, I'm done. If I take the first trade and I get stopped, like the one I showed you, I will look for a second trade to try to come back. But I don't trade all day. I mean, the room's open pretty much between 9:30 and 10:15. That's it. So again, this is an average risk of around $3,500 a trade. You can risk less. You must have a margin account to do those trades, but less is more. It's focused on quality. Well, think about it. If you're not doing that many trades, you're not going to have that many losses. You can't. You're not doing that many trades. So I'm trying to focus it down. Again, win ratio high means less trades, quality, okay? And again, then whether you hold it, many of these went way past where I exited them. They kept going. Whether you want to hold it or not is totally up to you, or you're in the room and you follow me and get out where I get out. I mean, people enter my trading room every day expecting to win. You can ask anyone that's in the room. It's just a mindset. People come in and they expect to make money. And that is something that is very unique and very different for a lot of trading rooms. You know, like it's just once you switch, a button switches off in you and you have a series of green days, especially if you've been losing, could be, 1 week, 2 weeks, a month. At some point, your mindset shifts. The one thing, the only cure really for taking yourself from losing to winning is you got to start winning. So either you got to follow someone that's winning, or you got to learn it, and you just do it. You almost do it blindly, and then you switch and change your mindset. And it doesn't take that long for that to happen for people. But again, a lot of people I talk to that, like people that I've talked to even last year in 2024 that are still talking to me about doing my class that haven't done it, like I can tell from the things that they say, they're so worried and so scared because they've done other things and they haven't worked. Well, you got to take risk. You got to take a chance. Trading is about risk. It's a risk to get up in the morning, to cross the street, to drive on the highway, to get in a plane. This is life. You have to be willing to take risk. So I chunk it out in the live room every single day. Take one trade, get out. It's about working smarter, not harder. Again, the weather now is still chilly. It's still chilly here in New York. It's been in the 40s. Next week it's supposed to be 66 on Wednesday. We'll see. I'm probably going to go in the park then next week. But I don't want to sit and stare at a screen all day from 9:30 to 4. There may be days where I know there's going to be a lot of volatility. A lot of things can happen. I might have to watch my screen. Friday was one of those days. We've had some series of really power trend days in the market in the last 2 weeks. But in general, I am not trading all day. I want to do other things with my life, And again, the more you trade, your odds go down that you're going to have more winners as the day goes on. Your odds go down. The most profitable time to trade is in the morning, the first half hour of the day. So again, why is shorting the way to go for fast profits? It's panic. Think about it. I mean, even like we were talking about, look at the market. People are panicking. Oh my God, they're not gonna drop rates. Oh no. The war, Ukraine could go into NATO, and then there's going to be a World War III. I mean, you could name a million things why the market has panicked in the last 2 weeks. And then you look at the sell-off, you say, oh yeah, well, that's no wonder, people are panicking. Okay. And the number 3, if you want to be successful, become an expert in one thing. We've been talking about this all day. Focus on one thing. That's all you need. Just in and out, do the trade quick, be consistent, focus on the gap, focus on one trade, and that's going to help you become successful. And you need to take a big picture look at it. Again, you have to stay consistent. As I give myself full credit, I'm very consistent with what I do every day. I had a guy that did the class actually in February that has been following me almost since I started the business, more than 10 years. And he watched every video I've ever had on YouTube. And he says, oh my God, you're doing the same thing you did 14 years ago. You're still doing now. I said, yeah, that's right. Because it works. I'm very consistent. So again, it's the consistency. Like I talked about, a lot of traders are all over the place, and you're not going to get where you want to go that way. You're just not going to get where you want to be 6 months from now, a year from now. So don't get sucked into thinking that, because it's not the way to make a lot of money and be successful. Again, think about Seinfeld. Think about the Seinfeld example. He focused on one thing, becoming a comedian. And then he became successful and earned a lot of money. So again, how do I stay consistent? I get up in the morning and I rate the gap, and I focus on the gap. I focus on finding a gap that rates 20 points or more. I focus on shorting. Okay. That's how I know what stock to do every day. Some days I have a couple, some days I have one, but I'm always looking for the power money. And again, the checklist is my double, triple check of myself. No one's standing over you screaming, do it, do it, do it. You have to kind of be your own boss. This whole thing with Doge right now, where Elon Musk is saying, I don't know if that happened already. They gave him an extension. You got to name 5 things you did this week or something. No one's saying, tell me what you did this morning. How did you lose that money, Mr. So-and-so? No one's standing over you if you do something wrong. You have to be your own boss. Okay. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. You have to be your own boss. If I get up in the morning and I rate things, or I don't even see anything to rate, I said, no, I'm not trading today. That's it. Nothing to do. We're not trading. Done. And there's days that I don't trade. So I'm like, have to hold myself accountable. Again, you know what I'm saying? And that's, part of being independent, part of being an adult, quite frankly. And you got to, that's okay. But the checklist helps you in the morning figure out what to do. And then stay accountable to yourself. Carrie says, great webinar. Love your thought process. Thank you. And it works. It works. Again, we talked about the Walmart. That went bigger than I thought. I got out of that before the last drop. The most valuable information for people to trade can be found in reading price action and gaps. Understanding chart reading of gaps will really help you, help assist you. It's like seeing a gold mine because, again, you're like, oh my God, this is going to tank. Could go $20, $30, whatever. Some trades are bigger than others, but we're just looking to hit a home run every day. I don't always know when we're going to get something to a piggy target, but sometimes I do. And how do you know that? I'll say it in the room. I'll say it in the room. I'll say what I think. So again, the system tells you how, what, and when. How do you make money in the market? Trade a strategy and system that is profitable.
Hello?
Go ahead.
Hey, Fausto, Rich, Landmark Huntington.
Good. How are you?
Oh, I don't know what happened there. Fausto's talking.
Yeah, everything worked out well.
Can everyone hear me? Hello? Okay. How do you make money in the market? Trade a strategy system that is profitable. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap and rate 20 points or more. When you trade them early in the morning when they set up and trigger, and you must have a structure in place to make any money at all. I'm going to skip ahead here to the information about the class. Again, follow your dreams if you want to do it. I have people that are successful. Everyone's doing well right now. Again, the opportunity's been there in the market. If you want to sign up, the classes March 15th and 16th, you will learn the entries, the exits, the targets. You will learn the rating system. You want to have a good year in 2025. You want to empower yourself to trade and make good decisions. It's a complete system to learn to trade. Again, you could do day trades, you could do options. I'd like to do both, but if you want to do one, that's fine. You could start with one and then eventually do the other one. The class is called the Golden Gap Course. It's a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. Class tuition is $69.99. Class is March 15th and 16th, 9 to 5. Class is online. You can be anywhere in the world and take it. Again, it is a class on how to find, pick, and play professional bearish gaps. I'm doing a spring forward special, as you will know. We changed the clocks Sunday. This Sunday, the 9th, don't forget. If you sign up by the 9th, again, it's the weekend before the class, and you can get in and start trading. You can start trading tomorrow if you sign up today. Get in, start trading the week before the class. You will get the trading room and the newsletter free through the end of 2025. This ends on Sunday, the 9th. And again, some people have already signed up. Let me just see here. If I have a little time, I can bring up some charts. How do you find stocks with gaps? That's finding gaps is easy. I just said a million things gap almost every single solitary day. Let me see if I can, if I just pull this up, can you see my charts? Oh my God, look at this. Yay, we're falling. Can everybody see this? Can you see my charts? Let's look at Tesla. Oh, beautiful. So I just talked about this. I just said this. Does anyone listen to anything I said? Like 40 minutes ago, I said something. I said something about how people love to go long. And I was talking about how people were probably trying to go long the market. And look at this. Woo. Let's look at the SPY. Look at this. Wow. Again, I was here with you, so I don't know if something happened or whatever this is or whatever. But anyways, let's look at the crowd. Here, I'll show you what I did today with the crowd. Where did this go? 343. Here, this is a beautiful trade. We got in, we got out. Boom. Got the drop. This kept going though. Look at that. I had a good exit on this. I had a really good exit in this. I got in here and I got this first drop. But look at that. This went all the way down. So this is what we did today. And then I liked the A&F, but I didn't do it. Let's look at that. This worked too. Again, if I had done this, I would have gotten in and out here. And we did the target yesterday. And this is still lower. Any questions or anything you want to go over? Anyways, the market technically gapped up today, but we did not go long this. In fact, I'm actually short the market. And so I'm excited to see this fall. So again, I was talking about this with the last 2 weeks of the sell-off. Let me just blow this up here. You know, again, if you do not understand how to short, you're just missing huge opportunity, number one. And again, we're talking about momentum. You know, the market's still in an uptrend. It's 100% still in an uptrend here. But the fact is the momentum has been going to the direction of selling in the last 2 weeks. And again, the reasons why we don't concern ourselves with, you know, the day that we had this here, which was Monday, actually. Remember this here? I just can't tell you how brutal that was for the market. Brutal. That was only 3 days ago, actually. Look at that. And we haven't recovered from that. We haven't recovered that. The problem is a lot of people didn't short. Again, retail traders prefer to go long. Like I said, a lot of people didn't short. People don't want to short here because they're like, oh my God, we're 17 days down. I can't short this. And then people want to go long, like this morning, like yesterday, like Friday, and then the market keeps falling, then people lose. People are getting crushed right now that don't know what to do. But, you know, we're doing very, very well. So I just, you know, I don't know what's tomorrow, but we'll see. We got Thursday, we got Friday, and then we have the Fed next week. If you can't afford a margin account, you can buy a put. A put is a short. A put is a short. I just showed you those ones that were options. You set up an options account. Your minimum requirement at a retail broker to do options is $2,000. You set it up as a cash account. That you don't have to have a margin account to trade options. Buying a put is the same thing as shorting. And a lot of people are doing that are trading with me because they don't have a margin account, or they just prefer to do options. And because it's cheaper, it's cheaper. I like doing both, okay? But really the benefit of doing options is not that it's cheaper for the cost of the trade. The benefit of doing options is that you can hold overnight. That's the benefit, okay? Now, I'm not predicting this happens, but I wouldn't be surprised if you get up one morning and the market has a huge gap down. I don't know when, could be today, could be tomorrow, could be 3 months from now. I wouldn't be surprised if that happens. And that would be a huge, huge trade if I'm in a put. So the benefit of doing options is you capture overnight moves with a fixed risk. It is not the small account, but people, if they don't have margin accounts, can open up an options account and do a put. Don't not short. And like, if you're planning on going long the rest of this year and only doing that, I don't think you're going to survive. Like, I'm not saying 100%. I don't see it yet. I'm just going to look at this really quickly and I'll let everybody go. Like, I don't see it yet, but this is the market. This is where we go right there. We've had a beautiful run up. It's fabulous. Okay. You couldn't ask for more. We had a year in 2022 when we started to turn bearish. It's sold off. Again, where do we go? I don't know. I'm not worried about predicting long-term right now because I'm an active trader. I do the weeklies and I day trade. Okay. But I'm telling you, there's a possibility that the market could turn this year. What are you going to do? Keep going long? You're going to lose. So you have to learn how to short. You have to figure it out. I want to be clear. I am not saying 100% conviction that the market turns this year. I'm saying I know now, particularly here. There were 2 days when I was like, oh my Lanta. Here was the one day. And then here was the one day. And actually, we had a very bearish close in the market yesterday, despite the fact that we closed green. There was a bearish close for the market yesterday. But anyways, these 2 days, I was like, woo. I'm telling you, there's a possibility that the market could turn in 2025. I'm just like, so, Any other questions? Again, you can trade options if you don't have a margin account. Buying a put is a short. We buy puts and we sell them to exit. That's a short. Okay. Anyways, any last minute questions here from anyone? If not, my email is melissa@thestockswoosh.com. You can email me if you have questions, if you're interested in the class, if you're interested in the spring special. Be careful, everyone out there. Try to do well. Thank you for having me, Fausto.